Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your weekly technical analysis of LME 3-month copper, aluminium and lead.
LME 3-month copper. Until recently, the market had, more or less, utilised the medium moving average, currently at 83.91, as a sort of a base to push and test higher. And at the same time, the top sign had been capped, sort of, by 3 separate, though not necessarily unrelated, resistances. The first was, and is, the April 2012 high, highlighted in dark blue on my daily chart, and that's at 86.65. This had previously been breached, but repaired. The second resistance was, and is, the extension to the upper trend line of the June to August 2023 ascending triangle, currently at 87.54, and highlighted in bright red on my daily chart. Now, this has not been tested in recent times, but it is still there, and it relates to the April 2012 high, as it was created by the overflow in June and July of last year over the same April 2012 resistance. The third resistance is unrelated. It is the purple-coloured neckline on my daily chart of the February to April 2023 Head and Shoulders continuation pattern, currently at 85.64. This was likewise penetrated in late December, the same as the April 2012 high, but again only had the single close above it. More recently, due to its declining angle, had helped cap the market in late January with only a single close over it, and again 3 weeks ago, with once again only a single close over it. However, late last week and now this week, this has been breached and now broken. The base of the very recent move upwards has been the congestion between 83.46 to 84.40, containing the September 2012 high 84.24 and the February 2013 high 83.50, down through to the long moving average, currently 83.66, as well as the medium moving average. 3 weeks ago, I spoke about 2 possible pathways here. A possible head and shoulders topping pattern from early November 2023 to early January 2024, and a bullish halfway hesitation pattern at the time. Now, at the time, I suspected the market favoured the head and shoulders top pattern. However, the break we had then was a false break lower, and has been a tortuous one, as rises had been limited by the same purple highlighted neckline previously mentioned. However, the market had in late February built on the congestion below to 84.40, plus the green highlighted short-medium moving average, currently at 84.57, and finally a golden cross of the medium moving average up over the long moving average just over a week ago. And that's, I know, is a lagging indicator. And that staged the move up, the whole of them staged the move up over the purple neckline. Now, in all this toing and froing, the market may have just turned the recent head and shoulders pattern into a continuation pattern, and possibly created another reverse head and shoulders pattern over December 2023 to date. Now, there's a bit of a debate where the first shoulder should be measured from. Plus, such a pattern is in the wrong place. But for now, just keep a continuing close eye on the April 2012 high in dark blue and the bright red extension overhead. I suspect they may become key. LME 3-month aluminium. There was and is a lot going on here, and I sometimes think I may have made it even more complicated. To start with, we have the gapping move higher in December last year that led to a monthly key reversal up for bullish halfway hesitation in the middle of the rise and a horn top at the end of the rally. Then there was the subsequent drop, which was halted at the October 2022 base support down at 21.56. This in turn led to a rise up through two necklines from a pair of reverse head and shoulders continuation patterns, one from February to April 2023 move, currently at 21.99, highlighted in bright red on my daily chart, and a sharp one from June to July 2023, currently at 22.53, and that's highlighted in bright green on my daily chart. In late January, the rise topped out at a third neckline coloured in dark green on my daily chart of the October 2022 to May 2023 head and shoulders pattern. That's the head and shoulders top pattern. That's currently at 23.04, and then judderingly started to move lower. This was how I clarified what I had seen 4 weeks ago, and I quote, "Over this last week," so that's 5 weeks ago, "over this last week, another pattern has started to develop in my mind, and I've drawn it, unhighlighted on my daily chart. It's a late October 2023 to date, possible, potential, diamond pattern. It is not a pretty pattern, but I would pay close attention to the converging trend lines for this pattern. I am not in love with this pattern. I will retire if it does not perform, but it does have merit and is one to watch," end of quote. 2 weeks ago, I highlighted this pattern in dark blue on my daily chart. It is still not the best such looking pattern, but as I said earlier, it does have merit, especially as it looks like we are on the verge of breaking higher. Thus, it seemingly to lay out some potentials for such a pattern topside. Hence, we would have a primary target X in a 24.12 area and a secondary harder to reach target X1 in the 24.91 area, which actually is up off the top of my daily chart. A key factor in prompting me to lay out these potentials has been the break higher late last week and early this week out of the small February to early March bear channel, currently 21.50 to 22.43, a bear channel that I pointed out 2 weeks ago. I've since highlighted it in purple. This bear channel also has its own potentials topside of a primary target X2 up in the 23.36 area. So what's stopping the market getting to these targets? Well, the immediate resistance is being slowly overcome, and that is the October 2018 high at 22.67. The next real resistance is the previously mentioned dark green neckline, and then perhaps the unhighlighted March to May 2023 head and shoulders top neckline, currently at 23.22. Should we reach that high, then target X2 would be liable to be reached, and a reassessment would then be in order. LME 3-month lead. In mid-November 2023, the market reached its zenith, its recent zenith. The same high we saw back in August last year, just over 2,300, before turning around and leaving behind a V-top with a substantial extension from early December last year until late January this year. The extension ended up being a bull channel, which is still highlighted on my daily chart in dark blue. The market traveled along this bull channel but staged a force break higher in late January this year before dropping down, all the way down to the congestion. Not spectacular congestion, but enough to hold prices in a pipe bottom 4 weeks ago. Since then, the market has risen into a very steep ascending wedge pattern, highlighted in bright red on my daily chart, before breaking lower, only to be held at the same support seen back at the start of this year. That's the January 2020 high at 20.39, before starting a fresh rally. 2 weeks ago, I was tempted to draw a possible diamond pattern, such as we have in LME 3-month aluminium, over the action between roughly late December to last year and today. But I was back then, and still am today, not wholly convinced, though it is an idea. For the moment, I will stay with the immediate market and pay close attention to this break higher. Prices are currently overcoming the 50% Fibonacci line of the March 2020 to March 2022 move at 21.35. And the market has further congestion at the 50% Fibonacci line of the May to November 2023 move at 21.42. And at the 50% Fibonacci line of November 2023 to February 2024 move at 21.51. However, I suspect the key overhead resistance will be the same as in late January, the congestion between 21.82 to 21.89.
Thank you for listening. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. Copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.